Two negative reverse mortgage experiences that were recently shared on the Washington Post created some consternation and concern in our industry, myself included. In a moment, I'm going to get into why those experiences may have been negative in the first place. But before we begin, I want to thank the sponsor of the Industry Leader Update. That is Fairway Independent Mortgage. Be sure to click on the banner right above this video frame and learn more about the Fairway team, the tools, and the support staff they have to help you succeed in your reverse mortgage origination business. Now back to this week's question. Why were these stories negative in the Washington Post in the first place? Before I really dive into that, I want to ask you, our viewers, you're saying, Shannon, wait a minute, this format's totally different. Your screencasting, your little inset, you don't have the fancy studio. Well, we had some audio problems in the studio yesterday, and by the time I got to post-production, I'm like, you know what? I got to try something different. But since I'm here, I want to ask you, do you enjoy this format more? Do you find it more engaging? Do you find it more educational? Please let us know in the comment section, because this is all about you. We want to provide content and deliver it in a way that's both educational and entertaining. So we have to hear your opinions to make that happen. So thank you so much. So it was brought to my attention that this particular column was not written by a Washington Post staff columnist. It was written by Elise Glink. And Elise Glink, I was notified in an email, is actually a Chicago-based freelance journalist, and she's also a syndicated financial columnist. So she has some gravitas when it comes to financial topics. And if you Google Elise Glink and reverse mortgages, you're going to find a number of stories under the news tab in Google, and you're going to see that many of these stories were in fact free. If at worst, she's been neutral about reverse mortgages. She hasn't been like some of the typical journalistic interactions we've had with reverse mortgage stories that are either completely just wrong-headed or misinformed or inaccurate. She's been very fair-minded about reverse mortgages. She's on CBS. She's on the Washington Post, as we already know, in other national syndication release outlets. And I go to YouTube, and Elise has been very fair-minded about the reverse mortgage there as well. So she's talking about using a reverse mortgage to pay for medical bills. One person whose opinion, who really tracks the trends when it comes to the national media and reverse mortgages, is Peter Bell, CEO of the National Reverse Mortgage Lenders Association, or NRMLA. And Peter said, I think there is perhaps a wake-up call. There is a valuable lesson for our industry in this. I hear many industry participants say every senior should look at it and consider a reverse mortgage, but that's not the case. It's hyperbole. So what is Peter getting at? Well, should every senior, look at and consider a reverse mortgage? I would say they should be aware of it, but should they really look at it? If we go back to the borrower experience, let's go and look at the experiences themselves. I almost got a reverse mortgage with my wife a few years ago. So this is a couple. The thing that stopped them is they had a low credit score, and the amount of money they would access in the line of credit was pitiful. They said it was expensive. This is the comment left on one of Elise Glink's former columns about reverse mortgages. The only way there'd be any value for the heirs after 15 years would be if the real estate market was on fire. We could literally find no one out of 5 financially knowledgeable people they spoke with, probably friends, that would talk positively about the reverse mortgage. In some circles, those who get a reverse mortgages are considered poor. And of course, that's the stigma that has been unfairly attached to reverse mortgages. And then let's look at the other comment. I looked into a reverse mortgage that I saw advertised on TV. I received a CD from the company by mail. There was no specific details about the reverse mortgage, nothing about the financials. Let me just stop right there. If you receive something in the mail about reverse mortgages, great, but they're not going to have your details until you engage with one of their loan officers, most likely on the phone. But on the phone, when they got some more specifics. They said, I wanted a reverse mortgage on my house that's valued about $200,000. I also informed them I'm 68 and my FICO score is 810. and I fully own the house with no outstanding mortgage. So a couple of red flags there. One is they have the house completely paid off and their FICO score is 810. And as they investigated more, they learned that the cost to get the loan, they said, was $15,000. Now, one of our podcast listeners astutely observed that seems a little incredulous. That amount seems really, really high to only get access to $100,000 out of a $200,000 home. So getting back to what Mr. Bell's quote was, there is a valuable lesson here. And these two specific instances, maybe they shouldn't really be pursuing a reverse mortgage that seriously in the first place. Now, should everyone be aware of it? Absolutely. But in this particular case, should we be working to say, hey, this is a great loan for you? Well, maybe it's not, at least with a guy with an 810 credit score and the home fully paid off. I reached out to Steve Irwin, and he told us this: these loans aren't a retirement financing solution for all, but under the right circumstances, they can effectively enable a senior to age in place. And this gets back to the style of communication we have. Now, it's a challenge when it comes to national advertising and marketing. I get it. We're casting a big net, and we're going to get all sorts of folks. Those who maybe shouldn't be really considering the reverse mortgage and looking at it that seriously, and those who really should look into the loan. But when it comes to our messaging as reverse mortgage brokers and originators, and those of us that are interacting with the public, with the homeowners, and with financial advisors, perhaps we should take a little bit more of a measured approach. And Peter Bell said this: if we hone our rhetoric to more realistically target prospective clients, we can avoid much of the negative perception that exists amongst the public at large and overcome the skepticism of regulators and consumer advocates. And I would say the Socratic approach is very effective. Socrates said, I can't teach anybody anything, I can only make them think. It's not for everyone, and it really depends on your situation. And by approaching that, you build a little bit more credibility. You also create some curiosity, and it's a great sales technique. You're saying, listen, I don't know if this is the right thing for you. It's more of a consultative, professional approach, looking at things a little bit more holistically than diving right in and say, man, you should really consider getting a reverse mortgage. Why should they? Maybe they don't need to consider getting a reverse mortgage. That's the approach that I think that Mr. Bell is getting at, that the more that we're a little bit more refined, a little bit more tempered in our statements about the reverse mortgage, that's going to help improve the reputation of our industry collectively for all of us, and we benefit from that. So honing our rhetoric more realistically, I think, is super important. Generalized and vague statements, folks, are just not the way to go. So getting back to the Washington Post stories, looking back at these two negative experiences. Now, one actually applied and the other just investigated the loan. Were they, brought along to think that, hey, this is something that would be a good fit, or did they have their own misconceptions or prejudices about the loan beforehand? We don't know. But one thing I do know is this: the more that we can approach and discuss this loan in the public arena in a more tempered and realistic manner, saying, listen, we don't know if it's the right loan, and we don't even know if you should consider it, that increases the credibility of not only us as a professional, but our industry at large and the reverse mortgage. That's my 2 cents and my opinion. Again, speaking of opinions, we want to know if you like this show format. Be sure to comment in the comment section below. And if you're on YouTube, be sure to subscribe and hit the notification bell on our channel. That way you never miss an upcoming episode. And if you enjoy catching your reverse mortgage news on the go, you can do that on heckhamworld.com under our podcast section, or you can subscribe to our email list. That way you never miss an upcoming episode of our videos or podcast. And if you're on iTunes, you can listen and subscribe there as well. Thanks again for joining us this week. Hope you enjoyed the new format. Be sure to let us know, and happy originating.